get started?
Yes, we can see you.
Perfect. So first off, yeah, my apologies for this very complicated title, because it's a bit misleading in the sense that while it is accurate, we're going to talk about hidden landmarks that are hard to spot with the naked eye and which are very important to most trading, as certainly to our trading, which covers both swing trading and also shorter term trading. But the reason why I say it sounds very complicated, maybe too complicated, is because as you will see, it's actually quite mechanical, provided you are using the right tools. Now, we're going to ease into all of this, but before we do, let me reach out to you guys with a little perhaps controversial quote from a famous movie. The movie is called The Wolf of Wall Street. I bet that most of you have perhaps heard of it or even watched this movie. And there's this famous quote. I had to edit it a little bit for language, but it says that nobody, I don't care if you're Warren Buffett or Jimmy Buffett, nobody knows if the stock will go up, down, sideways, or in circles. And let me just ask you guys out there real quick, do you agree, or is anybody here in the room agreeing with this statement? I'm not sure if the commentary function is on or the comments function is on, but if it is, yeah, guys, maybe a quick feedback. Do you agree? Is anybody agreeing with this? Well, I'm not sure if you guys can put the answers in, but if not, let me tell you what I'm thinking. I 100% do not agree with this, because if you don't, if you agree with this, then I think we're all here probably in the wrong place, because as traders, we believe, and I certainly believe, that the market is to some degree predictable, and there are tools, indicators, techniques, and knowledge that you can use to make predictions as to where price will be in the future. And let's face it, in trading, this is basically what we're doing. We're trying to predict when and where price will be in the future. And how we do it and which tools we are using and how we interpret the market, this is what I'm going to show you today. Now, real quick, who is this guy, quoting the Wolf of Wall Street, talking about predicting the markets? Well, real quick, and Anthony, thanks for your introduction. My name is Daniel Sinnig, here on the right-hand side, and I am one of the founders of tradingindicators.com. We are headquartered in Montreal in Canada. I myself, I'm from Germany, as you probably can tell by my thick accent, but I moved to Montreal about 20 years ago. And about 10 years ago, we have started tradingindicators.com. And as you may imagine from the name, which Trading Indicators is a platform specializing on innovative trading indicators. This is really our bread and butter. We've built thousands of those for clients all over the world. We've seen it all. We've built for TradingView, for NinjaTrader, for MT4, MT5, TradeStation, Thinkorswim, ModifWave, MetaStock, and so on and so on. So we've seen it all. And of course, we've built many indicators, some good, some not so good, and some amazing. And some of these have become our what we call flagship indicators, which really have turned our trading around and the trading of many of our clients. And what these flagship indicators are, how we use it to predict the market of where price will be in the future, this is what we're going to discover together today. Now, real quick, to my background, as you can see here by this title, I used to be a professor in software engineering here in Montreal. I was doing research in software engineering. I was teaching in and around Montreal in software engineering, software requirements, software design, all these, programming, of course, as well. But you know what? During all these years, I was also fascinated by the world of finance and the markets and how you can make money in the markets. So what I did back then, this is many years ago, I started trading on the side. I'll play some trades here and there. And of course, as you start out, and I'm myself also a victim to this, you tend to make all kinds of mistakes. And so did I. So I took too much risk, of course. I overtraded. I traded when market conditions were simply not right. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools, which will help me make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators back in the day, which I've ever written, they were exclusively for my own purpose. But once I realized, hey, these indicators actually do make a difference to me. They actually do help me make better trading decisions. And I thought maybe others could also benefit from these indicators. And this is really how the story behind tradingindicators.com started. All right, but enough about me. Let's talk a little bit about what we're all here for today, about how we interpret the markets and which indicators we are using right now to make these forecasts. Real quick, just a reminder that if you trade FX, futures, stocks, and so forth, keep in mind that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and trade setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, here's what we're going to be doing today. Well, I will do a little bit of theory. I think it's important just to for you to understand of why we've set up the way we have set things up. It's important. It's not going to be too long, maybe 10 minutes, and then we're going to jump right into our 3 most powerful setups, and then we're going to go to the live charts right afterwards, looking at our liquidity IQ indicator and how it can help us to make predictions in the market. Sounds good? Let's get into it. And one more thing before I forget, if you have any questions, please don't be shy. Put these questions into the Q&A box or the chat box or whatever is available on your webinar tool. I will take a look at those, and I will be happy to answer these questions as we proceed. All right, let's get into it. First off, who agrees with me that oftentimes, I guess most of the time, in fact, charts seem to be quite unpredictable? Like this chart here. Look at this one here. An uptrend shortly reverses into a downtrend, only then to go up into an uptrend again. Quite chaotic, almost erratic. Really hard to make sense of what is really going on here. And we suffer from this as well. Some charts, just by looking at them with the, in quotes, naked eye, can be confusing. But guess what? This is what really turned our trading around. Every single chart, it doesn't really matter what it is. It could be a tick chart, a 5-minute chart, a daily chart. It could be a futures chart, a stock chart, an ETF. It doesn't really matter what it is. Every single chart has so-called landmarks, which are hidden levels of price to which price will react in the future. This is important, in the future, in a certain way. And if we are able to identify where these zones are, where these landmarks are, we can indirectly make predictions of how price will react to them and where price will be in the future. And remember, trading is all about forecasting where price may be in the future. This is what we want to do today. This is what I'm going to teach you today. Now, let me give you an example, a very abstract example. Let's look at this hypothetical chart here. So what do we see here? So back in the day, let's say a couple of years ago, it doesn't really matter. It's an example. Price made an historical high. We can see here price came up and then came down again, but this was the historical high back then. Then price came down, came up again. And then here we have a series of swing lows. So price came down, wicked up again, came down, came up, came down, another swing low, and then came up again. So these events, historical highs or multiple swing lows or multiple swing highs, and many other things, they can create, in some cases, important landmarks. And what do I mean by important landmarks? Because oftentimes, price will revisit these levels in the future. And once again, in the future, this is important because we want to find tools and techniques which have relevance moving into the future. So for example, here in this very simplistic example, we can see price is reapproaching this historical high and seems to be bouncing off from this level and going lower again. And where does it bounce to? All the way to the level made by this series of swing lows and bounced up from there again. So there seems to be some significance to these levels. Okay. Now, we're not the first ones to discover this. This is a concept which has been out there for many, many years, and some people, give them interesting names. very common names, such as, for example, support and resistance, or perhaps liquidity zones or liquidity levels. It doesn't really matter what you call them. What's important is that these landmarks exist and price may react to them in a certain way in the future. Now, let's say we are reusing these concepts of support and resistance. Then, we could try to investigate a little bit more, like going into theory. Why is that? Now, who is in charge of creating these levels of support and resistance? What is happening in the market? And of course, every theorist in finance will tell you, okay, a support level is created when demand exceeds supply. You can see it here, price goes down here, demand exceeds supplies, price will go up again. Goes down again, demand exceeds supply, goes up again. So something is happening down here at this level, preventing price from going further down. And oftentimes this happens because big block buy orders are coming in, driving the market upwards again, and the price pivots to the upside. Same for resistance, big money sell orders, block sellers are stepping in, preventing price from coming further up, and price instead will turn and pivot to the downside. Now, you may say, okay, this sounds like theory. What can I possibly do as a retail trader to influence the market in this way? And you're absolutely right. You can do absolutely nothing about this, because these levels, these price pivots, these are not caused by us small retail traders with our small orders. These are caused by the culprits, the big money traders, the institutions, the ones who have the buying power to move the market in this way. But, and now it gets interesting, while these big players, they are calling the shots, what we can do as retail traders is we can follow the patterns and profit in the process. If we are able to spot where these key levels are, we can estimate how price will react to them in the future and find promising trade setups in the process. But of course, the question is, and we're going to get to this, how can we find these levels? But let's just assume for 1 second, let's say we know where these levels are. We know where these levels of support and resistance already are. Well, if we do, we can then predict how price will react to them. This brings us to our next topic, and we're going to get very practical very soon. The next topic is, what are my favorite setups? My 3 most interesting or my 3 most powerful setups. Well, here we go. First off, this is what we call the bullish bounce trade. You can see it here. Price is an uptrend. Let's just assume it's an uptrend. Price has been going up for quite some time, but then retraced down to what we call a support level. And of course, support is called support for a reason. And oftentimes when this happens, price will bounce off the support level, and some other factors also come together, towards the upside, towards the middle, in between support, this red line here, and resistance on top. So you can see a price came down and then bounced to the upside. That's one setup. Another setup, which I like to trade a lot, in fact, I just opened up a trade with this setup, is what we call the zone break setup. In life, nothing lasts forever, but also in trading, unfortunately, nothing lasts forever. At some point, every support level, these red lines, or every resistance level will be broken. But when this happens, also new opportunities are opening up for us. Because in this case, we could simply, of course in quotes, simply trade in the direction of the breakout. So for example, here support is broken to the downside. You can see this red line has been broken to the downside, and then price is continuing in this direction. That's a classic breakout move. And we as traders, if we are able to identify these breakouts, we could simply enter in this breakout direction, anticipating, yes, price will continue to move to the downside. This is our zone break trade. And we have one more trade, which I'd like to discuss with you, which is kind of a combination of our bounce trade and the zone break trade. We call it the zone break retrace trade. Sounds super complicated. It's actually quite simple when you think about it. So what's happening here? Price in this particular example broke above this green line, which is resistance. You can see it here. Price went above this resistance level, went up initially. You can see price comes up and comes up, but then it turns around. It pivots and it goes down again. And then it stops where? Right at this broken former resistance level. And we probably have, or you've probably heard it before, when resistance is broken, what happens to it? Well, it changes its role. Resistance becomes support. That's exactly what happened here. Price stopped almost magically at this level and then continues in the direction of the original breakout. And oftentimes, these setups can be a nice launch pad for another massive move higher. Now, these are my 3 favorite setups, which I trade all the time, either from a swing trading point of view or from a day trading point of view. Now, of course, the question now is, how can we spot these lines of support and resistance? How do we know where these levels are? Well, guess what? You may have guessed it already. We have developed an indicator specializing on exactly this, on detecting where these key levels of support and resistance are. And we call this indicator the Liquidity IQ indicator. And it's on every single chart that we open up. It doesn't matter what we trade and what kind of trading approach we're following. This indicator is the only indicator which is always on my price chart, no matter what. Why? Because it shows me these super important levels on the chart, which will help me to make sense of an otherwise almost erratic chart. It will help me to make predictions about the future. For example, price to be bouncing off a level to the downside from a resistance, or the same from support to higher price levels, and so forth. This is the only indicator always on our chart. Now, enough theory. Let's look at some charts together. All right, so I'm going to switch over to TradingView, and just in case you were wondering, yes, our indicators will work for TradingView, but also for many other platforms like Thinkorswim or ModewWave or NinjaTrader and so forth. We're going to talk about this in just a bit. Okay, so what do we have here? I'm going to start with a swing trading example, just to keep things simple. Let's ease into swing trading. I know the speaker before me talked about the SPY, the S&P 500, or the ETF that tracks the S&P 500. Here we have a daily time frame opened up with no indicator right now on it. And what we can see here, and you probably know about this if you follow the market a little bit, we can see prices kind of stalled out a little bit in the last couple of weeks. This is a daily chart, and we came even down a little bit. And to me, and we talked about this in our trading room quite a bit, to me, this in fact did not come as a surprise at all. In fact, we have warned our users, hey, be careful. Yeah, if you want to go long here, maybe our prices will stall out a little bit and perhaps correct a bit to the downside. You may now ask, why did I talk about this? Well, it's because of this indicator, which I will be enabling right now. Check it out. This indicator told us, once it's loaded, it just takes a little while to load. It's a very complex indicator. This indicator told us, well, by means of this greenish box here in this little line, you can see it here. Well, we are approaching a key support level. This is when price came up to this level here. Key resistance level, my apologies. We're approaching a key resistance level from where price may have difficulties to push further up. And guess what happened? Yeah, we knew about this level back here on November 24th. This is not drawn after the fact. Price came up to this level and then turned around, pivot to the downside. And we warned our users in our trading webinar a couple of weeks ago. Yeah, be careful with your longs in the SPY. Selling puts or whatever you want to do. This might not be the right time to do it because we are approaching a key resistance level. Okay, so price respects these levels a lot, key resistance and also key support. Look what happened down here, just to give you a bit of an idea. Back here on November 20th, look what happened. Price also came down a bit. And where did it stop? Exactly at this red line here. This is a key support level. Price came down to support and then pivoted to the upside again. And I personally, when this happens, I sold some puts at this point because I thought, hey, this is going to be the bottom of this correction. There were some other factors as well, which we're going to cover in just a bit. And I believed, okay, the S&P 500 will turn around again, and this bearish correction will complete, and the overall bullish trend in which we are in, of course, in the SPY will resume. Of course, also we had a big high volatility bar here, which made these puts expensive, which of course is in your favor when you are selling puts. All right, so this was the SPY, and I want to show you 2 more things. First off, our indicator specializes in drawing these key levels. We already know this, but it does a lot more. We're gonna ease into these features step by step. First off, it has something called mentor mode. I had disabled it. I'm going to enable it right now. When mentor mode is enabled, give it a second, it will annotate your price chart with everything noteworthy. I sometimes have it disabled just because I already know it so well. I don't need these labels anymore. But for those of you who are starting off with this indicator, this can be really useful. For example, what does it annotate? Let's just have a look here. A zone break. Look at this one here. Back in June this year, we broke above a key resistance level. And look what happened afterwards. What a move afterwards. This is our classic zone break setup. The price just, really blast off after a zone is broken. Down here, it labels support zone, this reddish area. This is our support area, which oftentimes prevents price from coming further downwards, and instead price will bounce off this level towards higher price levels. Here we have a resistance level, resistance zone. Same principle. Price is bouncing off this level, but in this case to the downside, respecting resistance. And we have something called a liquidity capture event, which oftentimes are events where, you can see this little shaded area here, where the odds of having a bounce are further amplified rather than a zone break. We're going to talk about this a bit later. Okay, so this is the SPY. Let's check out some other charts. So the QQQ, the NASDAQ 100 ETF. What are we seeing here? All right, the indicator will be loading. Just a second. We can also hear price very similar. Here we had a zone break. You can see it here. Back on September 12th, price went up, but then came down again. And guess where it stopped? Exactly at this former resistance level. You can see it here. This was resistance, came down to it, and then it moved further up. And then came all the way up to this new resistance level. You can see it here and bounce off it again. And now we're kind of in the middle, in between support and resistance. One more example, gold, GLD. And then we're going to look at some short-term charts as well. What do we see here? Well, let the indicator load. What do we see? Well, gold right now, this second, well, not the second, but today at least, actually for the last couple of days, is where? Right in this resistance level. Do you think it's a coincidence that prices have been stalled out a little bit in gold? They kind of went flat? In my view, it is not, because we are right in this resistance level. Now, I would not be surprised if we do see a bit of a bearish bounce off this level in the next couple of days. So gold has stalled out. Let's look at silver. We'll talk about silver a lot. Silver has been blasting off quite a bit. And look at this. Silver did not stall out. Today is a bit of a down day, but overall, silver did not stall out. It continued higher. People often say gold and silver are correlated. Well, they are oftentimes, but in this case, they were not. Why? Because gold was facing resistance. Look at this one here. We had resistance, whereas silver, back to silver, had nothing. There was no level above silver, nothing to hold it back. That's why silver continued to push higher and gold stalled out a little bit. So I hope this gives you a bit of an idea of how important the knowledge of where these levels is can be to trading. And not just to swing trading, these were all swing trading examples. Also, this can also be important to day trading. Let's check something out. I'm going to switch context now. So we looked at swing trading. Now let's switch context to day trading. All right. So what do we see here? Well, this is actually a textbook example of what happened today in the market. This is a 50-minute chart. Okay, look what happened. So we opened up bullish. You can see it here at 9:30. Prices pushed up. They pushed up higher, but then they kind of stalled out. And guess why? Once again, same principle. Let me just enable mentor mode. All right, same principle. We start out because, as soon as the indicator loads, because we hit, guess what? A key resistance level. We came near to it and bounced off this level of resistance. And then, look what happened. We came down. We had a big bearish bar on at noon today. I was watching the market very closely. And guess what happened afterwards? We came down all the way to this support level, which we knew about. Let me just have to go back from here. Back on Wednesday, December 17, we knew about this level. This was yesterday. About this key support level. Prices came down to it almost to a T and bounced off this level towards the middle in between support and resistance. This is the power of knowing where these levels are. In fact, if you look at my trade alerts here in TradingView and my log file, we can see here that MES at 12:45, we did have, or a bit earlier even, we did have an alert alerting us, hey, for the micro S&P 500 futures, forgot to mention this is the micro S&P futures, we had a bounce case with a liquidity capture. Liquidity capture means this candle, which wicks down into support, also has abnormally high volume. And oftentimes, this can be a sign, it's a bit agnostic, but to us at least, it's a sign that, hey, something is happening. Somebody's driving up the volume. Somebody's submitting big block orders at this point, potentially driving price further upwards. Remember when I talked about these big block orders coming in, preventing price from coming further down? These liquidity capture events, these can be the footprints of these ones. So just keep this in mind. All right, so this was the MES. Let's look at gold. What's happening in gold? MGC. Let me go to my watch list here. There we go. All right, so what is happening in gold? All right, let's see what's going on here on this particular chart. It's loading. Okay, here it's a bit more complicated. Yeah? Here the picture is not as clear, but we can also see that, okay, this level up here, for example, this green level, this resistance level, this has given price a bit of trouble. You can see price came up to it. We have a bunch of liquidity captures, and then we came down again. And up again, some liquidity captures, and came down again. Interestingly, however, remember how I mentioned that these liquidity capture events, oftentimes they amplify the odds of having a bounce of the level rather than a break? Look what happened lately here when we finally broke the level. We came up a bit, then of course we came down a little bit, but there was no liquidity capture. We just broke above it with none of these extra high volume bars. And oftentimes, you can interpret this, hey, nobody's really stepping at this price point. Price is let to go above this level. Nobody's stepping in with big block orders, preventing price from coming further down. But these insights, they have become so important to our trading that we cannot trade without this indicator anymore. Now, I'm going to quickly back up and go back to my slides. And of course, if you guys have questions, I'm not sure if there are questions in there. Let me just maybe pop out something here in my tool. I'm going to check these out a bit later on. Okay, perfect. All right, so back to my slides because I want to introduce one more concept, which will complete this entire mix, which I'm showing you right now. So what we've seen so far is our liquidity IQ indicator. We call it the instant charting assistant, because it shows you right off the bat, as soon as it's applied to your price chart, what is important, what are key levels, what are key events like zone breaks or liquidity captures, right off the bat, so that you don't have to worry about this. All right, but there's more, because we have also developed a second indicator called MA Rush, which complements Liquidity IQ in a very specific manner. Now, before I talk about this indicator, let me ask you guys, have you heard about this proverb called "the trend is your friend"? Until then, of course. Probably the answer to this is yes. You probably have heard about this. Now, if so, you probably also potentially have heard that it is easier most of the time to trade with the trend than against it. You probably agree with this statement. The chances that the trend will continue are simply higher than the odds of the trend reversing. That's a fact of the market. Well, we have developed an indicator called MA Rush, which will show you directly on your price chart what is the current direction of the trend. And it complements the other indicator, Liquidity IQ, perfectly. Let me give you an example. So back to the price chart. There we go. I'm going to go back to my to the SPY on the swing trading time frame. There we go. And now what we're going to do is we are going to add another indicator to it. And this is this one, MA Rush. You can see it here. It will take a second to load. And once it loads, all right, it's going to zoom back a little bit. It will, first of all, color these areas very nicely and beautifully. But more importantly, it will also show you, to go back quite a bit, what is the current trend direction. Of course, this here is the SPY, the S&P 500. Of course, the trend is bullish. And we can see it here by this indicator. There's a bullish label with the timestamp May 2023. This is when the indicator recognized, okay, this bearish trend, which was predominant before, has turned around and we've been bullish ever since. And I use this indicator almost all the time to further filter my setups. What does that mean? Well, for example, let's say, okay, we're bullish. You can see it here. But let's say, okay, we are coming up to this key resistance level. You can see this little green line here, or bluish line. That's resistance. Price is coming up to resistance. And I could ask myself the question, okay, maybe I want to go short here, betting on the fact, okay, price will bounce off this resistance level towards lower price levels. But now, what I like to do to further increase my odds, I like to check, hey, what is the prevailing trend direction? And am I in line with this prevailing trend direction? In this case, for example, the answer is clearly no, absolutely not. In this case, price, this is a bounce setup, which would be a bearish move, but the trend is bullish. They don't agree with each other. So I probably would have skipped this short trade because it's against the overarching trend. Similarly, let's look at here. What happened here? Price came down to this key support level. It's a bit hard to see, but it's there. This red line here, that's support. It came down here, and again, I can ask myself the question, hey, do I want to place a trade here? Do I want to bet on the fact that price will bounce off the support level towards higher price levels? And in this case, I would have said, yes, absolutely. Why? Because it's also in line with the trend. The trend is bullish, and the setup is bullish as well. Two things are coming together, predicting the same price move. All right, so this is what happened here. And in fact, I did action on this with selling some puts. There's always different ways to engage into a trade. In this case, the options trade was the one I wanted to do because puts were expensive. That's always a good sign to sell puts when the volatility is very high. Up here now, did I go short when price approached this resistance level? I did not, because it didn't fit my trading paradigm where I only trade when everything comes together. I want, here, this is a short setup in a bullish trend. I didn't do it. Of course, I could have made some money here, but I rather skip these trades. I'd rather miss out on a good trade than being caught in a bad trade. And sometimes, and not taking a trade in the first place is the best trade advice that you can get. Not always, of course, but oftentimes this can be the case. Now, so let's look how this could have worked for day trading. Back to our day trading time frame. What do we see here? All right. So it's loading, and I'm going to add now our MA rush indicator to it. Let's see what the trend would have been. Let's check it out. Okay, it's loading. This is day trading, and we can see here, okay, our indicator here is bearish. And of course, we've seen this on this 15-minute time frame. We've been in a bearish move for a couple of days now. Price has been grinding a bit lower, mainly because we're hitting overhead resistance on the higher time frames. But the trend is bearish. So this would mean to me, okay, I probably would have not taken long trades here when price is approaching support. Instead, I was waiting for a zone break and then potentially enter in the short direction. Or when price is coming up to resistance, I definitely would have considered shorts here, because this would be in line with the overarching trend direction, which is bearish right now. This is also why I didn't take any longs here when price came down here, because it would go against my trend. Again, it would have worked out nicely. Of course, these levels are important. Oftentimes, price does react to them anyways, but not always. And I like to trade when the odds are stacked in my favor. All right, so let's have a look at where we are. So now it's 1:20. And Anthony, how much time do I have in this presentation, real quick? Can you give me a quick heads up on this? If you do have a bit of more time, I will come back to the charts. But if we're running out of time, I'd like to let everybody know right now how you guys can get hold of these indicators, which I just showcased to you. So
you have
all right.
10 minutes. Yeah.
Oh, 10 minutes. Perfect. Yeah. Okay. So I'm going to show everyone how can you take advantage of these two indicators, Liquidity IQ and MA Rush. We call this the dynamic duo because they complement each other so nicely, like Batman and Robin, kind of the way the Liquidity IQ is our Batman indicator. It's so badass. It finds all these key levels, which will help you to make these powerful predictions. And MA Rush is the assistant to it. It helps you filter these setups even further by looking at the overarching trend direction. Now, how can you guys get hold of these indicators? First off, Of course, we have these indicators for TradingView. You've seen them on TradingView. They look beautiful on TradingView. We most of the time trade off the TradingView platform. But these two indicators, they work the same on NinjaTrader, on ModifWave, on Thinkorswim, and on MetaTrader 4 and 5. So if you have any of these other platforms, no problem. You can take advantage of these indicators. So normally, Liquidity IQ alone, this is for life. What I'm going to show you right now is for the lifetime package. Liquidity IQ alone has a price tag of $1,297. And you get this indicator for life. And I promise you, this indicator will pay for itself, period. The indicator, as you've seen, will show you these smart support and resistance levels directly on your price chart, along with some other important events like liquidity captures. We talked about these big block orders coming in, or zone breaks. But we thought, as a big thank you for being here today at the Traders Corner webinar, at this event, we're going to throw in 6 additional bonuses. And one of them is my favorite one, but I'm going to get to it. Bonus number 1, and you probably would have imagined, it's our MA Rush indicator. You're going to get this indicator free of charge for lifetime access. Secondly, you will also be, and this is a typo, you will also be invited to our next live trading workshop. It's not today, we just had one. It is scheduled for January 5th. I'm sorry for this typo here. January 5th is our next live trading workshop. And guess what we'll be doing in that workshop? We will be using these 2 indicators and our real money account, no demo account, to live trade the market open, primarily in the futures space, but also some stocks. Scheduled for January 5th, so this is a typo here. You will be invited to this workshop. You can observe how we configure these indicators, how we look for setups, how we set up alerts, all these things that you need to be effective with these 2 indicators. Bonus number 3 is an invitation to our exclusive live member sessions, which take place every single Tuesday at 12 p.m. Eastern time. And by the way, all these webinars, these are recorded. So if you miss one, no problem, you can watch the recording afterwards. So our exclusive member sessions take place every single week on Tuesday, a great outlet for anyone to ask questions, to learn tips and tricks, to see how we evaluate the market right now, and so forth. Bonus number 4 is an ebook on MA Rush, the trend indicator. We also have a video guide on how we trade with magnet zones, the concept which I didn't even talk about today, and a second video on how to trade with MA Rush and Liquidity View together. So all these 6 bonuses will be added to the package. But there's one more thing. On top of all this, we will also slash down the price tag from 1,297, which is actually much higher with all these bonuses, to only 997 today. And all you need to do, and Anthony, if you can, please put this link into the chat box, is to go to tradingindicators.com/IQ. So we call this the IQ indicators, consisting of Liquidity IQ and our MA Rush indicator. This is available for a limited number of packages, so don't wait too long. A unique offer, which we normally don't offer, available only today at tradingindicators.com/IQ. So check it out there. I'm going to put also this link. Let me see if I can find the right. Oh, there we go. Is it in there? No, that's not right yet. Let me just quickly put this in here. How can I, all audience? So I'm going to just copy and paste this link in there right now. So the Liquidity IQ Super Package. 1 second. There we go. Perfect. So the link is in the chat, and this package will allow you to get these 2 indicators along with all these bonuses for a special discounted price for life. No single follow-up payment is required afterwards. Now, what's in the package real quick? Of course, our Liquidity IQ indicator, which shows you all these key levels, which are so important to predict what may happen in the market next. That's included. Secondly, you will also get our MA Rush indicator, the perfect companion to Liquidity IQ, helping you to filter your setups by trend direction. The indicator finds the trend direction automatically for you. We even have some users in our trading room who exclusively trade by these trend changes. They go bearish or short when they see a bearish label, and then they reverse the position when they see a bullish label. And we've back tested this. This can be also very effective. That's included. And as I mentioned, January 7th, that's next year, Wednesday, when the market is back open, we will have our next live trading workshop where we will live trade with our own real money account, no demo account, the futures open, the cash open. Jan 7, that's a Wednesday at 9:30 a.m. And of course, this one is recorded as well. And we will be using these two indicators to find our trades. And thirdly, you will also be invited to our exclusive trading sessions every Tuesday at 12 p.m. Eastern time. Also, these ones are recorded, and you will get access to our Discord channel where you can ask questions, we can bounce off ideas, we could be posting lots of charts in these sessions and so forth. So all this will be included. Now, let me see if there are some questions. Okay, there's a question. Is this indicator based on volume profile from Meyer? No, it's not. We do take into account volume, but not in the sense of a volume profile where we look at how was the volume at a certain price level. We will look at volume over time. For example, which bar, which candle had the most volume. We'll use that one. All right, so the answer is this one. Okay, let me see if there are some other questions. And before we close, so if you have questions, guys, please don't be shy. Let me just quickly go back to my price chart to see if I can spot an interesting setup here approaching. Let me just give me 1 second. I'm going to go through some of the charts which I'm seeing here, because there's one more feature, one really cool feature, which is also very powerful. Okay, I'm going to look at this one here, Platinum Futures. Let's check it out. So I'm going to go back to my chart here. I'm going to open up Platinum Futures, PL. What do we see here? On the 5-minute time frame, I hope this is the right one. Let me just quickly see. Just loading. There we go. Okay, so we can see right now, Platinum Futures does have a zone break right now. You can see it here. We're breaking above this zone of resistance in Platinum Futures, which by itself can be an interesting trade. But what you can also do, just bear with me for 1 second, you can ask the indicator, hey, indicator, show me right now in an info box, what is the current setup? And once as this loads, I hope this is, there we go. The indicator will tell you, okay, right now, we are in a long break scenario or breaking above resistance. If you were to trade this, your stop loss would be at 1950, which is basically around this level here, right below resistance, and your target at 1,997, just below the psychological level of 2,000. This is also what the indicator will tell you. And one more thing, and I'm going to close this presentation. You can even visualize these levels if enabled directly on your price chart. Check this out. So just enable those. I typically have it disabled because I want to keep my chart clean. But if enabled, and once loaded, you can see directly on your price chart, hey, my stop will be here at 1950 and my target right here at 1996. The indicator will give you all this information. In this case, a reward to risk ratio of 2. All right. Perfect. So I believe, Anthony, this also brings me almost on the tee to the end of my presentation. It is 1:30. So I thank everyone for being here today. I hope you got something out of this presentation. If you have any questions which we didn't answer, you can always reach out to us at tradingindicators.com, our homepage. Go to contact there or click on support, then contact, put your question into the contact form, and I will answer every single question personally. With this, guys, thank you so much for your attention. Have a great show, and hopefully see you soon.